Imagine you are standing in your backyard, staring at a very tall wooden fence that completely separates your property from your neighbor's yard. This fence has been standing there for 10 years, and it is incredibly strong. Every single time your neighbor's giant, energetic dog runs at full speed at the fence to chase a squirrel, he smashes his face right into the wood. He bounces off and falls backward onto the grass. This fence acts as a perfect, solid wall that completely stops him from running any further. But one afternoon, neighbor's dog gets a massive burst of adrenaline and sprints faster than he ever has before. He hits the old fence so incredibly hard that the heavy wooden boards completely shatter and break into pieces, allowing him to run right through the hole and into your yard. But because the wooden wall is now completely broken, you walk over to the hole and place a heavy piece of plywood completely flat on the ground, right over the broken pieces. You do this so nobody accidentally trips and hurts their ankle while walking between the 2 yards. Now, instead of acting as a vertical wall that stops you from moving, the exact same piece of broken wood has become a flat, solid floor that you can safely step on. You literally walk right over the top of the old barrier to pet the dog. The same spot in your backyard that used to be a ceiling for the dog has now instantly turned into a brand new floor. This simple, everyday transformation happens on trading charts constantly, and it is one of the oldest, most reliable concepts in all of pure price action. Traditional traders have a very simple name for it. They call it resistance turning into support. When the market is pushing upward and constantly hitting its head on a heavy ceiling of sellers, the price will bounce downward multiple times, just like the dog bouncing off the fence. But eventually, the buyers gather enough strength and momentum to completely smash right through the ceiling, sending the price flying upward into new territory. Because buyers completely destroy that old ceiling, a massive psychological shift happens in the market. The exact price level that used to be considered way too expensive to buy more is now suddenly viewed as a discount and a cheap floor. So, when the price eventually drops back down to test the broken ceiling, the buyers aggressively step in and use it as a strong floor. This simple flip from a ceiling to a floor is just the natural behavior of the trading crowd. They remember where the major battles were fought, and their view changes once that level is broken.